For today's video, let's look at the recent changes in my portfolio. I sold out on one stock, and if you're curious, it's Micron. Let's talk about this one and see where I invested this freed up resources. Currently, I have a total of $56,000 on my portfolio. This is both from dividend reinvestment and my consistent investing. I have 16 companies on my portfolio, and let's start with Target. Currently, I have a total of 15 shares of Target, and I'm currently down by 26%. One of the comments in my previous video is if I still have Pfizer on my portfolio. Shout out to you, Chris. And the answer is yes, I still have 48 shares of Pfizer, and I'm currently down by 9%. I also have Home Depot, and I currently own 7 shares, and I'm currently down by 7%. Target and Home Depot released their earnings, and both companies have good results, but bearish forecasts pull their stock price down. Next is Stag, Johnson & Johnson, and Realty Income. I currently own 58 shares of Stag, and I'm down by 5%. Johnson & Johnson with 16 shares, I'm currently down by 4%. Same thing with Realty Income. I own 39 shares of this company, and I'm currently down by 4%. One of the reasons why REITs are dropping is because of rising interest rates. This decreased the value of their property and increased the borrowing costs for REITs. But strong fundamentals may very well outweigh the negative impact caused by rising interest rates. Suppose we look at Realty Income's recent earnings. The company beat all expectations. Revenue and earnings are both up, with the revenue beating the expectations by $61 million. Next on my list is SCHD. I'm currently down by 2.5%. This is the newest addition to my portfolio, and recently I bought 12 shares of SCHD after selling Micron, giving me more than 35 shares of SCHD. So with this set of stocks that I'm currently down, I consistently buy to pull down my cost basis. This means locking in and purchasing great quality companies with the benefit of buying at a higher yield price point. Moving on to our winning stocks. First is Google. I recently climbed to the positive side, and my cost basis is $122, which is $1 away from the market price. I have 13 shares of Google, and I'm currently up by 0.7%. One of my core holdings is Berkshire Hathaway, which is 13% of my portfolio, and I currently own 23 shares of Berkshire Hathaway, and I'm currently up by more than 7%. Another core holdings is Coca-Cola with 38 shares. I'm currently up by 10.5%. One of the highest yielding stock in my portfolio is AbbVie. I currently own 16 shares, and I'm up by 12%. With 29 shares, Starbucks is definitely pushing my portfolio to the upside. I'm currently up by 13.5%. Another consumer defensive on my portfolio is Kroger. Currently, I'm up by more than 13%, and Kroger already paid me 7 times in dividends. The total dividends I received from Kroger since I started investing in this company is $70, making my total return, which is the appreciation plus the dividends, a total of $190. If you're getting value in this video, don't forget to subscribe and hit the like button. Also, let me know in the comments if you want more portfolio update content like this. Right? Now, let's continue. One of my consumer defensive stock is Pepsi. I'm currently up by more than 14% with a total value of $2,894. I already earned 12 times in dividends from Pepsi with a total value of $94, making it $6 away to reaching my first $100 dividends from each stock. My total return from Pepsi is $391. Now, let's go to the top 2 companies that I have on my portfolio. In the second spot is Microsoft with a total value of $8,700. I currently own 27 shares of Microsoft, and I'm up by more than 28%. Microsoft already paid me $100 in dividends, and my total return is $1,964. And on the top spot is Apple. I own 57 shares, and I'm currently up by 29%. And yes, Apple also pays dividends, and I already received my $82 dividends, making my total return up to $2,636. These two companies have low dividend yield of 0.82% for Microsoft and 0.54% for Apple, which is okay because we're always looking for the total return. This portfolio actually pays monthly dividends, and this month I will receive $150, which is the highest dividend payment that I received compared to previous months. This $150 will be reinvested to my portfolio, pushing my future dividends up. Now let's talk about Micron. One of the reasons why I sold this company is because of their recent earnings call and fundamental changes that I want to implement to my portfolio. Micron missed their earnings and I didn't really like the guidance that they put out. I've been investing and following the performance of the company to see if they will provide the return that I've been looking for, but with the recent earnings, it looks like Micron is not a company that fits my investing strategy. Additionally, I am trying to minimize my exposure to political risk. Granted that all of the companies in my portfolio have exposure to political risk, Micron is one of the very hot potato. After the recent run-up, I sold Micron at around $66 after holding this company for 2 years, and the freed up funds has been added to my SCHD position, and some are distributed to my core holdings. Now, how I pick what companies to buy and when to sell these companies took a really long process for me to figure out. Luckily, Peter Lynch, one of the most successful investing giants, shared 3 simple investing advice when deciding what companies to buy and when to sell them. You can learn this 3 simple investing advice in this video and let me know in the comments what companies were you able to pick.